What's ahead for our property markets in 2024? That's what I'm going to be discussing today with Dr. Nicola Powell, Domain's Chief of Research and Economics. Now, we're almost at the end of the year, and it's unlikely that at the beginning of this year, you would have believed the resilience of our housing markets. Our property markets reset at the beginning of the year, and house prices have risen for 11 months in a row now. And that's despite the interest rate rises, high inflation, reduced borrowing capacity, and a media that was keen to warn us that our housing markets would crash. Now, remember all those commentators who tried to scare us about mortgage stress, a fixed rate mortgage cliff, and even a recession they were talking about 12 months ago? Then throughout the year, the media was full of stories about aggressive rate hikes, pressure on mortgage holders, rising cost of living, dwindling supply of properties at a time of rising migration, and skyrocketing rent that pushed Aussies into homelessness. Yet despite all the challenges thrown at them, property values in our combined capital cities have kept rising, albeit at a slower rate over the last month or so. So as I mentioned, joining me today is Dr. Nicola Powell, Domain's Chief of Research and Economics, to discuss Domain's latest house price report. And we're going to talk about her forecasts for property values in 2024. So whether you're just looking to buy a home or an investment, or just interested in what's happening in our market, maybe you're just curious about what's ahead for 2024, I'm sure you're going to get some great insights from my chat with Nicola Powell. So let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Well, 2023 is going to go down in history as a year that we had the beginning of a new property cycle. It began as our markets defied high interest rates, and it defied all the predictions from those property pessimists made around this time last year. It was a year where we saw a shortfall of housing supply collide with the rapid population growth, a strained construction sector, and the tightest rental market on record. And Australian property prices rose. In fact, rents skyrocketed. But what's ahead for 2024? That's what I want to ask my guest today, Dr. Nicola Powell, Domain's Chief of Research and Economics. Hi, Nicola.
Hello, Michael. Thanks so much for having me on again.
Now, Nicola, I know everyone wants to know what you and the research team at Domain believe is going to be happening to our property markets in 2024. They want your forecasts. But I'm going to leave our listeners hanging for a little bit, because first I'd like to unpack what happened in 2023, because of course that's going to give us some context for the year ahead. So maybe could you please start off by sharing with us how 2023 panned out in your view and those of Domain?
So when I kind of walk away from 2023 and do that look back, I think for me, the thing that stood out was the behavioural side, firstly, of our housing markets and the reaction that we saw from vendors, because we did see a pullback in listings, which began in the later part of 2022. And we've got to remember and we speak about this often, don't we, Michael, in terms of those behavioural aspects of our housing market, how it shifts decisions. People don't want to sell when prices are falling, or if they think there is challenging times occurring economically. And we saw that. And what that actually did for our housing markets over the first half of 2023 was place a floor under pricing. It constrained the level of new listings that came on, and it meant that we saw buyer competition rise.
Well, buyer confidence returned before vendor confidence didn't it, this last year?
Absolutely. And it really took until midway through 2023, like that late part of winter, until we started to see sellers regain that confidence. And it was almost a year or two halves. You know, the first half, sellers weren't confident and buyers were. And then in this second half, we've seen that seller confidence return. And that's actually helped to slow down the pace of growth. Prices are still rising, and we've got many records across our different capital cities. But we've certainly seen that seller confidence rise. Auction listings are high also. So you can really see that seller confidence has flourished.
It has. Interest rates really didn't affect the market a lot. It affected our household budgets. For some people, the cost of living affected people. But I guess we've been speaking about this for the last couple of years. And while interest rates are a factor, a much bigger factor was really the supply and demand ratio and also consumer confidence. But there was a lot of concern, more in the media, about another cliff, another one of those. We had the unemployment cliff and the interest rate cliff, and this time it was the fixed rate cliff. Didn't come to light, did it?
Absolutely not. We called it the cliffhanger. It was meant to be this, fixed rate cliff that was really going to impact our housing market. Because you got to remember, between kind of 2020 and 2021, we had rock bottom interest rates, and we saw the share of fixed rate home loans during that period of time almost double. And it got to almost 40% of outstanding credit, which is a record high. I mean, it's a huge amount of people that were, on a fixed rate, those ultra low fixed rate home loans. But what was happening is people were rolling off them, and the peak of those refinance events was occurring over the June and September quarters. So we've actually passed that peak in refinance. What all the data shows is actually people have transitioned well onto the new mortgage environment, which is very, very different to when they were ultra low. What we have seen is there has been an increase in mortgage arrears. It still remains very low and close to historic lows. And we look at other data sets like distress listings. So what are the proportion of distress listings on Domain? And it might not necessarily mean that somebody's a mortgage repossessed. It might mean they just need to quickly sell their home because they're, that step before becoming repossessed by a bank. And even what's interesting over 2023, every single month, we've pretty much seen the proportion of distress listings slide.
So there's fewer distress listings as the year goes on, Nicola?
Absolutely, proportionately. So we look at them as proportion of total listings. We've seen them shrink. And I think that showcases that overall, that big risk to pricing in our housing market has remained contained and has shrunk. I would say, though, and I'd call out, and you'd expect this, Michael, that there are certain areas that have higher levels of distress listings. It's in that mortgage belt. It's areas like Blacktown, it's areas like Campbelltown, it's Sydney, really focused Sydney in that mortgage belt, which is understandable. It's a highly leveraged market.
In other words, young families overcommitted. Understandably, they'd never seen interest rates rise like that. And at the same time, their cost of living has gone up. So there's lots of different definitions of mortgage stress, and the media's loved talking about mortgage stress, which one definition is that your mortgage costs more than 30% of your income. Having said that, people would rather eat Maggi noodles than sell their homes, and they've got mortgage brokers. Many mortgage brokers in advance have actually helped their clients. The banks have been helping their clients. It's actually been known. I found in general risks come out of the blue when you're not aware of them. Here, people were aware, and many have been prepared. So I think that's a great fact that we haven't had the distressed mortgage sales that some people predicted. But despite that, overall, there was a sense of, maybe gloom is too strong a word, but consumer confidence has been at historic lows much of the year, hasn't it?
Yeah. Absolutely. As a nation, we've been very, very pessimistic. And that's actually one of the unusual aspects of 2023's property market is, normally we see an upswing and price growth and high levels of activity occur when consumer confidence is optimistic. And that hasn't been the case. We've been actually quite pessimistic for, as you said, historic lows. We've been gloomy. I would use the word gloomy. I do think that overall, people have been very concerned about the economic outlook and what this means. And also, riding the waves of consecutive rate hikes, the cost of living, it's really weighed on households. But even then, we haven't seen that play out in our housing market. And I actually think it's one of those aspects to watch for next year, for 2024, is once we start to see consumer confidence improve, there's a close relationship between consumer confidence and housing market activity. And once we start to see that improve, we should see greater levels of housing market activity and actually could provide a stronger upswing than, and I won't dive into our forecast just yet, but a stronger upswing than what we're actually predicting.
Yeah, we're teasing the audience, aren't we? But that's okay. That's good. So as the year progressed, month after month, property prices increased. The turnaround happened at the beginning of the year, and the markets have been fragmented. Some states have done better than others, and within the state, some locations have done better. It started more with the high end of Sydney at the beginning of 2023, didn't it? And then more medium value properties increased in value.
Absolutely. And we tend to find that the upper end of the market in Sydney does lead price cycles. And so it was, the culprits of, for example, the eastern suburbs. While they may seem more vulnerable during a downturn, they do tend to see deeper falls. They also ping back in price pretty quickly. And, whenever I want to know what stage a property cycle is at, I tend to look towards those premium areas. I look towards, listing volumes, the transactions that are occurring and auction clearance rates to give me an indication. But you're absolutely right. We saw Sydney lead the recovery, but there's been other capital cities that have continued to defy expectation. We saw Adelaide and Perth, they actually avoided any material downturn in price. And what they did is they just went through this period of slower rates of price growth. They continued to push to new record highs. They've ended 2023 with new record highs. For house prices, Perth's unit sector is slightly different. But Adelaide and Perth, I think, were pretty much the standout performers in terms of just continuing to strive for those new record highs.
Now, I know you've spent a lot of time looking at all the research data and putting together a very detailed housing market report for Domain. In fact, you've been very busy recently with the rental report that we've published in Property Update and an auction report for the end of the year. But let's have a talk about some predictions you've made for 2024, Nicola, having looked at all the research and dug deep into what could be affecting our markets in the next year.
Yeah, so there's a few things that we picked out. The first one would be interest rates. I mean, interest rates have been, a really dominating part of 2023 in terms of the dynamics and conversation as well. And I do think interest rates are going to be one to watch for 2024. There's increased chatter that we could have another rate hike early next year. We're anticipating that rates will be cut towards the latter part of 2024. I think once they're cut, that will feed into better consumer confidence, and it will eventually feed into a stronger housing market upswing and greater levels of housing market activity. So interest rates are definitely one to watch for next year.
Now, it just goes back to what you said a moment ago. It's not just rates, but it has to do with consumer confidence. So that may also start to pick up as the year goes on, as there are a number of pauses in interest rates. But it's all changing next year. The Reserve Bank's going to meet fewer times. I don't know when the 8 times rather than 11 times it's going to meet, and they're going to have a theoretically more transparency. So interest rate cuts make sense. It's going to happen because there are at the moment at the rates levels which are meant to slow the economy. And when they do their job and inflation comes under control, unemployment will unfortunately have to creep up a little bit. But when all that happens, the Reserve Bank's going to do what it always does. And a recent report I saw a little while ago, somebody went back 50 years and looked at all the interest rate rising cycles and saw how long it was on average till rates were first cut. And on average, Nicola, it was 10 months. In fact, there was a couple of aberrant periods where it was longer than that, but on average, it was actually 10 months, and many times it was less than that. In other words, eventually interest rates do their job, and then the Reserve Bank has to lower them. And we don't really know what that Goldilocks rate is, where it's not too high to dampen the economy, but not too low to stimulate the economy. But I guess they're going to come down, maybe 0.75% or 1%. I don't think they're ever going to get back in our lifetime to the wartime levels of COVID.
Oh, totally. And I actually think what it showcases is the amazing resilience of our housing market through a period of strong and aggressive rate hikes. And, there is this element that rates are going to remain higher for longer. But I'll repeat, our housing markets have been incredibly resilient. And it showcases that there are many other factors that actually drive pricing cycles. And population growth is actually one of those that I do think that we underestimate how powerful that is in driving demand for housing and driving price cycles.
Well, clearly people have to live somewhere. All these overseas immigrants, and many more came than were forecast. They've got to live somewhere. They don't bring homes with them. Of course, it has another effect too, doesn't it, Nicola? What it does is increase inflation because they've got to buy goods, they've got to buy things, there are more of us around. So the Reserve Bank's got its work cut out for it, but I agree with you. I think interest rate cuts are going to come sometime next year, and when they do, that only is going to increase demand. Let's go through your other predictions for the year before we work out exactly what that means for prices.
Yeah, so the next one is the flight to affordability. And so I do think first home buyers are going to be a segment to watch next year because there are various schemes that are going to come into fruition. So the shared equity scheme, the Help to Buy scheme from the government is meant to be in place sometime next year. It is targeted towards lower income households, but I do think that will increase demand. It's a shared equity of up to 40% of a home, which is an absolute game changer for some people. But what you will find is we know that when you have an incentive, if it's not met with higher levels of supply and affordable supply, first home buyers are all going to be competing for similar priced properties in similar locations. So it will support price.
I remember when we had something similar years ago, some people called it a first home buyer's grant. I called it an established home buyer's boost because that's exactly what happened. It actually pushed up the value of established apartments at the lower end, didn't it?
Absolutely, that does happen. And, there's other incentives. So Queensland government announced recently they're going to double the first home buyer grant as of the 1st of January next year. So it's going from 15K up to 30K. And we know that when you add a financial incentive, it tends to add to the purchase cost.
Not the purchase cost, sorry. It goes into their budget to increase purchase prices. Yeah. I think we're saying the same thing.
Absolutely, using different words, saying the same thing. It supports pricing at the lower end, and probably for units as well, it will support pricing in certain areas. So, and there's this element that has been this flight to affordability, and I do think what we are predicting is, people are going to start looking at those suburbs that they perhaps overlooked. And, this is where you can really kind of, if you're a bit visionary and pick those right suburbs, we know that gentrification occurs. It occurs over time. When you think about 15 years ago, some of the suburbs that were very undesirable are very desirable today.
Aren't they? Yes. So followed the money in some ways because gentrification is really where people with higher incomes come in and improve a suburb. So in some ways it's a ripple effect as well, isn't it? So if you can't afford a house, you may buy a townhouse. If you can't afford a townhouse, you may buy an apartment. Location's important. I think there's another trend that a lot of millennials are now moving into household formation age. So one of their choices is how many bedrooms I've got. And if I can't afford that in one suburb, I've actually got to, they want the extra bedrooms in a Zoom room or a home office now. So they're going to move elsewhere. So I think that's a great point. Okay. You've got a couple more predictions for 2024, things we should watch for.
So my favourite one is YIMBYs will replace NIMBYs. So this is yes in my backyard will replace the not in my backyard. And I actually think what we'll start to see is a much more progressive approach to housing development and really making and driving accountability for housing supply. We know that supply has been a focus from government, and we've got that housing accord and that North Star of 1.2 million homes over the next 5 years. I think actually what we'll see is, that visionary approach. And local governments have lots of power. And if there's somebody within the suburb that says, no, I don't agree to this development, generally speaking, it doesn't go ahead. I think we'll have some powers being taken away. And we've started to see a little glimmer of this occur. So the Minns government announced recently that they will force councils to lift long-standing bans on low to medium density near transport hubs and town centres. So that impacts Sydney, the Hunter Valley, Central Coast and Illawarra. This is a game changer and the prediction is could add about 112,000 homes across those areas. And there's other governments that have started to do the same. And I do think 2024 is going to be one of those years where we really see that progression and visionary approach.
So when we come back in a decade's time and we have our chat, then we're going to be talking a lot more about medium density and high density living in Australia, aren't we, Nicola?
Yeah, absolutely. And clarifying that, it doesn't necessarily mean that we're saying that we need to have, 20-story apartment blocks in some of our inner city suburbs. It's about appropriate housing in the right area. And that will mean things like low to medium density housing. So it might be terraced homes, townhouses, 3 to 4 story unit and apartment developments. So really thinking about that missing middle of affordability, that missing middle of housing.
Well, that's what town planners have been trying to do for a long time, but councils and locals, NIMBYs, not in my backyard. And there was also notes, not over there either. But that's another thing.
Yes.
So, okay, 2 more predictions, please, Nicola.
Yes, and look, they're kind of interrelated, these two last ones. So population-driven housing demand, we've had record levels of net overseas migration. Most overseas migrants rent upon arrival, but what population growth does, and we've done research in this space, it has this longer collective effect on housing demand and pricing. So we will still see that demand flowing through. The longer you stay in Australia, the more likely you are to make a purchase. So that will still be a fundamental shape to our housing markets in 2024 and beyond. The next one, which is related to, is the rental markets will reach a tipping point. So we've seen the longest continuous stretch of rising asking rents. We've generally got record rents nationwide. We've just released the latest vacancy rate, and it's still at a record low for Australia-wide. But what we're predicting for next year is rental markets will reach a tipping point. There'll be certain areas that will be more balanced. We're past the peak in net overseas migration. I think we're starting to see investors are coming back into the market, and we've also got lots of first home buyer incentives for next year, which could mean it helps to ease the demand. So, and obviously stretched affordability, Michael, where, we're already starting to see people consolidating housing, going into house shares, and that's going to be playing out and dominating our rental market dynamics next year.
Well, your most recent rental market report from Domain showed that vacancy rates around Australia are at at historic low rates. And even if vacancy rates increase a bit, it's got to get to around 2% or so before it becomes equilibrium. And if vacancy rates get much higher than that, then the tenants or potential tenants have got more of a say and rents don't go up as much. So even if vacancy rates double, they're probably still going to be on the side that it's in the favour of landlords. Having said that, there's been a lot of media attention about ugly, greedy landlords taking advantage of tenants. If you look back over the last decade, rents haven't really kept up with inflation. So it's not landlords catching up, it's just the market forces at the moment.
It is market forces, and we've actually seen a lot of investors sell off over 2023. It was a big trend, and investors are much quicker to offload a property than an owner-occupier because, if they're not able to meet those financial obligations, they do, sell off an investment property. And we've got to remember that a big chunk, the largest chunk of rental properties are provided by mum and dad investors. And that doesn't mean they've got a book full of different investment properties. It means they have one or two. And I think we need to bear that in mind, that, there is two sides to this equation, obviously the renter side, but also the landlord side too.
Right. So putting all that together, I'm going to ask you in a second your predictions for property prices in 2024. And as usual, at this time of the year, predictions are coming out from all over the place, and forecasts are hard to make, particularly about the future. But having said that, the property pessimists are coming out again. The property bears hibernated for much of this year. They had to lick their wounds and go back in their caves and disappear. But a few people are out again saying no, property prices are going to fall in 2024. What is your thoughts, and what does the research from Domain show?
So there's obviously lots of push-pull factors that can unravel and are going to occur in 2024. But ultimately, what we are expecting is the undersupply of Australia's housing market is going to trump high interest rates. And what our forecasts are, I would describe it as moderate rates of price growth for 2024. We're expecting some of our markets to make minor improvements or minor growth. So, for example, Canberra, 3 to 5% for house prices. We're generally predicting stronger rates of growth for houses compared to units. Leading the growth is going to be Sydney. We're predicting between a 7 and 9% increase in house price, but also other cities like Brisbane and Adelaide, 7 to 8% increase, and Perth, a 6 to 7% increase in price. And I think the amazing one that really shines out for me is, Brisbane's unit sector. When I look back over the last, few years, it's been an interesting market where it's been trying to find balance between demand and supply within its unit sector, and it's found that balance. It's currently at a record high, and we are predicting next year that it is going to be our best performing unit market across the capital cities. We're forecasting between a 4 to 6% increase in unit price for Brisbane.
Well, it's interesting because a couple of years ago, Brisbane apartment market really floundered. There was an oversupply, and Brisbane really wasn't as much into apartment living as Sydney that started and then eventually Melbourne. But Brisbane apartments have done well with regard to prices and rents. So I agree with you that it's very likely we're going to have an upward property market next year. But again, it'll be fragmented. And as you suggested, it's going to be related to affordability as well. So if we summarise, and I summarised your report there are a number of drivers that are going to push prices up. And there's also going to be a couple of headwinds. So the drivers pushing prices up are going to be the increasing population. And we're just not going to give enough supply. We can't create it quickly. So yes, you talked about increased medium density development. That takes a while, doesn't it? And the big high-rise ones take longer. I wonder whether we're also going to get a little bit of relaxed lending next year, whether APRA is going to loosen its buffer of 3%, which means that the banks aren't going to be as strict with your serviceability criteria.
Absolutely, and I think that's one of the aspects that if we see interest rates being cut or a loosening of the serviceability buffer, they pretty much have the same effect in terms of they are going to increase your borrowing power, which will be a benefit to housing demand and could be that signal of better confidence from consumers.
But reading your report, I also saw that you're open about the downward price drivers, things that may slow the markets a bit, affordability, because at the moment the markets have played catch up, but now they're virtually back to where they were before the downturn of 2022. Rising unemployment. I mean, we know the Reserve Bank wants unemployment to increase to slow inflation, and still a huge percentage of the population is going to have jobs. 96% of the people are going to have jobs, I should say. Having said that, if there's uncertainty about your job, that lowers consumer confidence. You don't make big financial decisions, do you?
You absolutely don't. And this is the complex nature of our housing markets in terms of there are different things that can unravel next year, which actually change the overall outlook of forecasts. There are things that can have upwards or downwards price pressures. Something like inflation. If inflation hangs around for longer and is stickier, and we see more rate hikes from the RBA, that will probably change the outlook. And I think that consumer sentiment aspect is going to be a big one to watch in 2024.
But on balance, we're going to chat a couple of times next year. But when we talk at the end of next year, I bet you we're going to again say the property market has defied those property pessimists. And in general, the market will have gone up, but not as strong as this year. And I'm actually very comfortable with that, Nicola. You can't have double-digit growth so early in the property cycle. Otherwise, it wears out very, very quickly, doesn't it?
It absolutely does. And also, when you've got these short price cycles as well, because we're seeing price cycles occur more frequently over time,
yes.
Which also I think is a concern because, you don't want to be buying into, it's confusing, I think, for consumers. And so I agree. I think sustained growth at a more moderate pace is a much better outlook than big swings of highs and lows.
Very much agree with that, even though we all love getting in on a property boom and seeing the value of our homes or our investments go up. We just know that the end result of that is that at some stage markets are going to go down. So I'm going to put a link in the show notes to Domain's great report, and I'm actually going to include links to your other recent reports. You've been so busy at the end of the year with your auction reports for the year and your rental reports. Dr. Nicola Powell, thank you so much for your time today.
Thanks so much, Michael.
I hope you got some benefit and some insights as to what's ahead for our property markets from my chat with Dr. Nicola Powell. Now, if you did, and you're not a subscriber to this show yet, please just stop before we have the next couple of segments and subscribe or follow the show on whatever podcast app you're listening to us right now. By the way, I've got a way of saying thank you to you as well. If you go to podcastbonus.com.au, I've got a heap of reports and ebooks for you as my way of saying thank you for following my show. Now, as you heard with our chat with Nicola, the property markets are going to continue on growing over next year or so, but they're going to be fragmented and not all markets are going to perform the same. So you can't just buy any property and hope it's going to be a great investment. And if you're looking to buy a home, if it's not your forever home, you're probably going to want to upgrade it. So you're going to also have to think about buying a home with a bit of an investment hat on as well. But I bet you when we speak to people in 12 months' time, some are going to have taken advantage of the market. A lot are just going to sit by and watch. And unfortunately, some are going to end up selling up their properties because of all the hassles and challenges, because we're going to have another year of them as well. Which group are you going to be on? Are you ready for what's ahead? And are you ready to take advantage of the markets in 2024? If so, let me help you. Why not turn to the multi-award winning team at Metropole? Because we're much more than just buyer's agents. We help our clients safely grow into generational wealth through property. Hey, we're big enough to tip the scales in your favour, but still small enough to care. So whether you're just starting out or wanting to grow your existing property portfolio, go to metropole.com.au and have a chat with my team. We offer you a time-tested system. I fine-tuned the frameworks over the last 5 decades. We've been around long enough to see the patterns. So while a lot of people are going to give you advice based on data, we've got the perspective to interpret the data, but more than that, the wisdom of actually seeing the patterns, having been around for a long time. And we get our research from lots of different areas. And then in particular, I and the research team make sure that the strategies we give our clients are going to give them the results they deserve. Metropole.com.au. Having our team on the side could mean that you outperform the average investor and give your family the financial freedom you deserve.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset moment today, I'd like to address those times when people tell you, you can't do that, this can't be done. A lot of people are going to tell you that along your life. They're going to say you don't have the grit. They're going to say what you're going to try and do is too risky. Or maybe you don't have the skills. Maybe you don't have the experience. Some will tell you, oh, that's already been done. Somebody else is doing it who's better than you, so don't try it. People are always going to find reasons for you not to do things. But the truth is, these people are just talking to themselves. They're just telling you about their own excuses as to why they didn't do it. They're telling you about all the things that held them back, about all the things that are still holding them back today. So my message to you today is, don't base your decisions on the advice of those who haven't had to deal with the results. You only need one thing to succeed. Forget all the reasons why it won't work and believe in the one reason why it will. Not starting is worse than starting and failing. So don't worry about failure. You only have to be right once. As you've often heard me say, I'm a real success at failure. I've failed many, many times in all areas of my life, but I've got one more time and I've done it again. So when people tell you, you can't do that, you can't achieve that, you're not smart enough, remember, they're not talking to you. They're talking to themselves. Don't pay any attention and go ahead and do it. Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?